Come on in, sit back, relax. You're listening to episode 181 of the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. And this is our March news roundup. There's so much to cover, a lot of news this month. I think firms are really holding back December, January, and February, and just let it loose. End of February and March. There's just so much to talk about. Plus conferences. Orion's Ascend conference was the end of February. The big T3 conference last week in Tampa. The Shift conference last weekend. So much going on. So many press releases and announcements. It was tough for our crack team of news analysts to filter through everything, but we managed to narrow it down to 10 stories. Plus, of course, our monthly Advisor Tech map updates and some big changes to the Ezra Group WealthTech integration scores. But before we get into that, if you are an executive at an enterprise RIA, TAMP, broker-dealer, or asset manager, and you need some advice and guidance on wealth management technology, you should run, not walk, to our website, EzraGroupLLC.com, and fill out the Contact Us form on the homepage. Our experienced team can help with evaluations of your current tech platform, optimize your technology, run RFPs for you to select new vendors, implement that software across your firm, perform operational improvements, and more. You can sign up for a free consultation with us by going to EzraGroupLLC.com. All right, a quick housekeeping note before we continue. Please subscribe to this show wherever you listen to podcasts so you don't miss an episode. Now, let's kick this thing off. The first story in our month's news is the T3 conference. This is one of my favorite conferences of the year. I never miss it. At least I haven't missed it the past 10 years. And I believe next year is the 20th anniversary of the T3 conference. So that'll be a big one. This one was still very big. A lot of people, over 900 attendees, about half advisors and other firms, and half vendors, which makes it for a great mix of people and conversations. So much to go through. I'm working on a very in-depth summary of the conference, which is going to be a blog post you will be able to find on keatsis.com, hopefully next week. There's a couple other good summaries. There was one by Davis Janowski over on Investment News, one by Ryan Neal over on wealthmanagement.com. So please check those out. You can check out their summaries. There's also Tim Welsh who did his own summary on RIA Biz. I encourage you to check those out. So a quick review. I'll just do a review day one, which I thought had a lot of great content. Money Guide did a presentation, gave us some sneak peeks into new technology, new features and functionality, such as the single page plan, which I liked, and their something called Plan Pulse, which gives an overview of your entire firm's financial planning and what's been done, any clients who are falling behind, any clients who are missing a plan. Excellent enterprise feature. Onto Morningstar. They did a presentation talking about direct indexing and also including some details on buy all accounts and how they are merging some of the different platforms they have and cross-linking them with data. I think that's a great opportunity for them. They've got so much going and so much opportunity, so much software and so much data at Morningstar that has been disparate in different separate silos. I'm glad to see that they're merging things together, making it easier for clients to access different parts of the business. Of course, Orion Advisor Tech had their session talking about a bit about AI, which was a big theme of the conference. Seemed like almost every panel, every session was talking about Chat GPT, other areas. Orion did that as well, talking a bit about what AI can do for advisors and what it can't do, and what areas that advisors still have the advantage over AI. So you can check that out. There was a lot of large RIAs and broker-dealers at the conference, and they were on panels and presenting. And I always like to hear from these firms to hear about their tech stack. And I want to hear, what are you working with and what's working for you, what's not, how are you implementing things? Sequoia Financial, a large RIA, I believe they have around 15 billion of AUM. They were on a couple of panels sharing some of their information. They're a big Salesforce user, as an example, talking about how they integrated it into their environment, some of the apps they build, some of the different tools they're plugging into Salesforce. Always interesting to hear that. A company called Nest Wealth, a big Canadian fintech firm. They process about 80% of the wealth management account openings in Canada. which is a really big market share for them. They've been moving into the US with a $50 million funding round from Canada's National Bank. They generated a little bit of controversy and provide some great statistics and information about what's going on in the industry. So you can check that out. Of course, how can I forget talking about the T3 Tech Survey? Always excited to hear that every year to see what's going on, who's changed market share, where it's moving up, what's moving down. Some of the big takeaways from the T3 Tech Survey: we're not seeing enough cybersecurity. We really need to see more. Some firms are lagging. Some categories of firms are lagging behind in cybersecurity. We'd like to see more of that. Some gainers in terms of categories of software: tax planning up 11% by advisors in general, trading rebalancing up 7%, Social Security analysis up 6%. Those are interesting numbers. And you can check that out. There'll be soon the T3 survey, tech survey, will be available as a PDF you can download. It's not quite available yet, but soon it will be, and there'll be a lot more tidbits and information about that you can check out. And then Riskalyze is a great sponsor of T3, and Aaron Klein, the CEO, was on stage talking about their new growth platform, how they're expanding their capabilities, moving away from, hey, we're just risk, and we are a growth platform that includes risk, proposaling, which they built out, analytics, where they're competing with Morningstar, light planning, engagement, compliance, and other insights. They're trying to bring this all together and really own all the capabilities between the CRM and the asset platform. That's where they see their growth platform fitting in, as well as deep integrations. Always a good thing to see from Riskalyze. Fidelity was on stage as well, sharing a lot of details from their advisor survey. Some of the interesting stuff that came out of that survey was 40% of investors want their advisor to provide more advice beyond just investments. We've been saying this for a while, especially with the rise of robo-advisors. Advisors have to move up the value chain to stay ahead of automation, not just robo-advisors, but all automation, whether it's AI-driven or any other tools and technology that can provide some of the basic commoditized functions that is in any business. A couple other minor notes from this: 33% of investors want advisors to help them make healthcare decisions. That's big news, especially for the specialized planning vendors that are offering healthcare advice. Take that, you can check them out on the Keatsis Ezra Group map. There's a lot of talk about estate planning. Estate planning was an area that has been expanding, increase in market share, increasing utilization by advisors, according to the T3 survey. And there's a bunch of estate planning vendors, including FP Alpha, announcing a couple new features, functionality. One is they're breaking out their estate planning into a separate product, so it'll be a standalone application separate from their core functionality. And they're also offering a property and casualty snapshot to help advisors analyze homeowners policies and auto policies. Very interesting stuff. There was also a Schwab panel where they were talking about capabilities. They're talking about their upcoming integration and merger with TD Ameritrade, and basically trying to calm everyone down and say, hey, we've got this under control. They've been doing a lot of testing of their platform, and they believe that their new platform for advisors that's going to combine TD Ameritrade and Schwab is going to go great. Of course, there are lots of other smaller custodians who are coming in saying, hey, maybe it won't go so great. You come work for us, which is great. We always want more. We always want more competition wherever we can get it. And that's really the quick overview of T3. There's so much more to talk about. I would go on and on. Oh, one more thing before I finish it. There was a great panel, a great fireside chat with Brian Hamburger and Cheryl Penny from Dynasty Financial, where Cheryl basically gave an MBA class on running an RIA, mergers and acquisition, terms of deals, deal making, deal advice. Super interesting. You really should have missed it. I'll just give you one quick tweet. You can check my Twitter feed at Craig Iskowitz. I tweeted about a lot of these panels and sessions. He talked about 4 metrics that Dynasty evaluates ongoing. 1, have your plan, but be flexible to respond to events. 2, team, build an A team, which is the hardest part of any organization, especially an RIA. 3, capital, get enough to fulfill your vision for your business. And 4, timing. being in the right time, at the right place is crucial for being successful in any business. He mentioned how Dynasty moved from their headquarters from New York to Florida 6 months before COVID, and good news that they did. That really helped them out. So I'm going to wrap my T3 review with that. Again, go to Twitter. You can check out all my tweets about T3. And next week, go to keatsis.com. I'll be posting that link when my summary gets published. Next up is 3 stories from Orion. These all came out of their Ascent conference. They're really cranking out the new features, functionalities, partnerships. Orion is always at the cutting edge here. The first story from Orion. Orion Portfolio Solutions selects DocuPace for workflow automation. A recent study from Accenture shows that 93% of executives expect to have optimized front-to-back office processes across internal and external partners by 2025, which is a 50% increase from where their operations stand today. Not surprising. Who wouldn't want optimized front to back office processes? DocuPace is a good choice. One of the biggest workflow engine tools in our space, especially in the broker-dealer and soon to be RIA segments. Their workflow engine can automate compliance and business process rules by providing standardized and data synchronization engine, intelligent routing, alerts, notifications, configurable digital operations, and pre-built workflows. Of course, Orion Portfolio Solutions is Orion's TAMP, which is a combination of their acquisitions of FTJ Fund Choice, and Brinker Capital, doing really well, grabbing market share and offering more of a comprehensive solution where they can combine both their tech platform and a TAMP, which more and more firms are looking for to combine all those, that we have one vendor to deal with, one contract to sign, and what you like to say, one throat to choke. You can find out more about this technology. You can go to docupace.com or orionportfoliosolutions.com. So I'm rushing through these because there's so much Orion news to talk about. The second one is Orion launches breakthrough compliance technology with a new client oversight tool that's fully integrated into their wealth tech stack. Well, again, we love integration. We love a full wealth tech stack if you can get it. And we always say if all things are equal, it's better to have a full stack from one vendor than 10 different applications you're trying to integrate. Unless you got a good team, you've got the money to burn and to build out an IT team that can support all the integrations. It's often better to have one vendor providing it. Orion can do this. Their new compliance tool, they've always had some decent compliance technology, and now they've added pre-trade compliance plugged into their Eclipse trading rebalancing engine. They're offering share class alerts powered by Orion Risk Intelligence, ownership alerts for when you hit more than 5% of the public company shares, large trade alerts, which is 13H, initiate through Orion's compliance tool, alerts flags when transaction volume equals or exceeds the rule established thresholds within a daily or monthly time frame. You know, what's funny is that now Orion can do this basically in real time or very quickly in some cases. I know we built similar tools like this 25 years ago, except we were pulling flat files from the custodian and feeding it into a Microsoft Access database to run these reports. Now you've got them integrated into your overall platform, much more convenient, much easier for compliance to run in other parts of the business to see across your platform, a lot more visibility. So we really like these kind of tools. Just want to make sure they really integrate and they really provide a seamless experience and not just really standalone apps that are sort of cobbled together. We want to see real integration, the same UI across all these applications so that the compliance team and operations team don't have to keep bouncing around between different applications. So that's the second Orion news. Third Orion news. Orion reveals ChatGPT integration. Everyone's doing ChatGPT. It's the flavor of the month. But there are a lot of great capabilities you can access with this technology. So what is Orion doing? A new integration between ChatGPT and Redtail Speak, their compliant texting platform offered through the Redtail CRM, lets the AI analyze conversations and suggest responses to advisors. So the advisors can then edit the responses and then shoot them out to clients. This is a good use of the ChatGPT functionality because a lot of the text it prepares is a little bit stilted. You can tell a human didn't write it. So you really want someone to read through what the AI is providing and humanize it a bit, customize it for a particular client. So there's a lot of potential here. They can also feed in at some point in the future data points about the clients from the CRM, as an example, maybe even social media. So it can fit in saying, hey, I saw it was your son's birthday, or I noticed that your daughter just graduated from college. It can build that into the communications for advisors, because advisors have a lot of clients and sometimes they can't remember everything about every client. So if the AI can pull out and create an interesting comment or an interesting update for a client, that's going to be a benefit to advisors. As they say, as Eric Clark said at the Ascent conference, a lot of advisors are natural at speaking about portfolio analytics and other parts of the business, but then some maybe are a little stilted. Maybe they don't have those natural speaking capabilities. So building the narrative and identifying speaking points and bullet points is something the AI can help people to do. They've been beta testing ChatGPT and their APIs for a few months now, and they're looking to make it available in the next few months, said Brian McLaughlin, former CEO of Redtail, who is now the president of Orion Advisor Tech. Again, you can check out anything you want to know about Orion at orionadvisortech.com. That was a lot of Orion news. Similarly to our last story from Orion, which was about ChatGPT, this next story, Morgan Stanley partners with OpenAI on internal chatbot for its advisors. OpenAI is a technology company that built ChatGPT, partially funded by Elon Musk. And Morgan Stanley is partnering with OpenAI to build their own internal-facing chatbot, I guess a Morgan Stanley GPT, if you want to call it that. And it's going to help financial advisors and their teams answer questions. So you can post questions to the chatbot, and answers will be generated exclusively from Morgan Stanley's proprietary content library, including investment strategies, market research, commentary, and analysts' insights. How do they do that? Well, any AI and any of these GPT functions can be trained. So how you train the AI is how it will respond. ChatGPT happens to have been trained with billions of pieces of information from across the internet, whether it's Wikipedia or other publicly available sources. So you can just take the GPT system and train it on your own. And it won't have any of the other things. It'll only have what you want it to talk about. So Morgan Stanley is doing that, which is going to save advisors from having to comb through probably hundreds or even thousands of PDF files on internal websites trying to find answers to specific questions. They can just ask the AI what they want and receive an English response with links to the source documents. It's like having the most knowledgeable person in your firm at your fingertips at all times who knows where everything is. This is really where these GPT and other AI-based tools are going to provide value. And soon you won't really even know it's AI. You'll just be used to going to the chat function saying, hey, how do I roll over an account? How do I close an account? How do I put a structured note into a client's account? How do I approve that? What's the compliance issues? It'll just respond with you. I had seen something similar to this a couple of years ago. This is pre-COVID, I think, in 2019 at the Pershing conference. They were working with a company to build an AI chatbot that would do the same thing, but just for their environment. So if you wanted to know, hey, client lost their debit card, what do I do? It would bring up, type that into the chatbot, and it brings up the right form, pre-filled, to fill that out to send and to get them a new debit card. That's really where you're going to see a lot of value from these AIs and really customized for specific vendors or for specific wealth management firms. So Morgan Stanley, you know where to find them, and OpenAI, you can just Google and find them anywhere. We're expecting to see a lot more news like this in the near future. Man, I am on a roll now. Next story. Elements raises $5 million in a seed round as demand, or seed extension round, as demand for advice engagement grows. Elements founder and CEO Reese Harper told CityWire that they got some new capital from Flyover Capital that would fund operations for roughly 2 years as the revenues are rising pretty quickly and they're not burning as much capital anymore. Always good to hear from a startup. Some of the backers of Elements include Kickstart Fund or why isn't it Kickstarter Fund? Nope, just Kickstart Fund, SAAS Venture Capital, Grand Ventures, and Forward VC. Now, this group, along with a few angel investors that didn't increase their stakes, invested a total of $4 million back in 2021 seed rounds. So this is an extended seed round. I'm not sure why it's not a Series A. I was sure the difference there, but anyway, the cash funding helped them recruit people like Carl Richards as their chief brand officer. That was a great move by them. Love Carl and his work. So CEO Harper said that while Elements had started out doing business with small RIAs with 1 to 5 employees, they're now going to start selling into mid-market RIAs with as many as 100 employees. That's always good news. That's always what we see with our clients. You got to start small and work your way up, and having a couple $1 million in the bank always helps. So you don't have to worry. One of their one of the funders, Flyover Capital, one of the general partners is Marty Bicknell, founder and CEO of Mariner Wealth. Not bad to have him in your corner, and also some proof of concepts running at Mariner to see if how Elements can help them. We like the Elements platform, the application. They were in the light financial planning category on the Keatsis Ezra Group map, but we moved them into advice engagement since they were in themselves moving away from being a light planning tool and to being able to offer more growth. And if you look at their what people are saying about them, what their customers are saying about them, all of the testimonials talk about, I got a new client because of Elements. I did this because of Elements. It's, I grew my business because of Elements. So that's talking more advice engagement and less about specific planning. We like the elemental format with different, the table of elements, different colors. It looks sharp. Great mobile app, great desktop app. I think a lot of firms are trying to copy what Elements has done, and we're seeing more firms coming into the advice engagement category, which didn't exist early last year. We just created it, Michael and I, because we didn't really know where to put a couple things, and now it's crowded. 2, 4, 6, 8, 10. There's 12 applications now in advice engagement, and we'll talk a little bit about some applications that moved into this category at the end when I talk about the AdvisorTech map. But if you want to learn more about Elements, you can go to their website, getelements.com. Next up, I've been sitting on this news for a month waiting to talk about this. BlackRock sells Future Advisors direct-to-consumer business to Ritholtz Wealth. We were kind of shocked by this. We were shocked when BlackRock announced they were acquiring robo-advisor, Future Advisor, in 2015 for $250 million, which seemed like an insane amount of money for that platform. But they did it, and they've been running it quietly for the past 7, 8 years. I don't really think it's gotten a tremendous amount of traction, although they said on the direct-to-consumer side, which they stopped selling, they have 1.8 billion in assets, which is what Ritholtz is buying. So they're not buying the technology, they're just buying the assets, which makes a lot of sense that BlackRock is getting out of that. They're just keeping Future Advisor for B2B. They don't want to be into the B2C business. I get it, although BlackRock is a huge B2C firm, so why they wouldn't want to do more of that, but I guess they're really focusing on the roots, direct to advisors and direct to institutions. So it was interesting to hear that and why they're doing that, and how Ritholtz is now looking at more of a capabilities to service smaller advisors with their platform. They have their own robo platform as well. So that's great. Maybe they're going to move all those assets over to there. We do not know. But there has been a lot of movement from what we've seen on Future Advisor. I know US Bank partnered with them. I know LPL at some point had partnered with Future Advisor. I think a long time ago. It's got to be 7 years ago. So I haven't heard anything about it. And that's really what happens with a lot of these announcements. You hear an announcement, a lot of fanfare with the press release, and then it just goes away. You don't hear from it anymore, which means it didn't quite work out. So I'm not surprised by that. But it's interesting to hear this kind of movement. And we haven't really heard a lot about robos and these kind of digital advice platforms. It's kind of falling by the wayside as digital advice has become ubiquitous. Every vendor has the capability of offering these self-directed platforms, self-directed capabilities to wealth management firms. So it's just not a unique feature anymore like it was when things were back in 2015. Now everyone's got it. So no one is unique there. So that's the wrap on BlackRock selling future advisors to direct-to-consumer business to Ritholtz. Moving right along, next story. Commonwealth transforming into a large national RIA with a BD platform. This is from FA Magazine. Last year, Commonwealth added $11 billion in AUM to reach a total of $243 billion. I know we had talked to the Commonwealth a lot last year. We just talked to all the broker-dealers. We work with a lot of them. We keep in touch with them. And they were telling us last year, I mean, I didn't know this was going to happen, but they were telling us last year how much they see themselves as just a really large RIA, considering that 80% of their assets were already on the corporate RIA versus the broker-dealer side. So I found it to be interesting when they told me, and it makes perfect sense that they're now just becoming a national RIA. We're seeing more large RIAs launching their own white label advisor platforms, usually built on top of one of the big vendors like Envestnet or Orion or Black Diamond or others, and then white labeling it, maybe mixing it TAMP capabilities to offer more of a full service feature. And it's easier to do that now. It's easier to connect the software. It's easier to white label it and deploy it and build some unique capabilities because they're all really competing for the same group of advisors. So whatever they can do to give themselves a leg up and give themselves something unique selling points, they're going to try and do, whether it's firms like Private Advisor Group or Mercer Advisors or other nationwide or national RIAs are doing something similar. So it's not unusual to see them doing that. Of course, Commonwealth built their own tech platform from scratch, starting about 16 or 17 years ago, which they call Advisor 360, and eventually spun off into a separate tech company, also called Advisor 360. And everything's 360 at Commonwealth. I believe their client platform, client facing, is called Client 360, and they have an Ops 360. That's just their terminology. They've got a lot of capabilities. I believe they have a network of 2,000 FAs, which is relatively small. I mean, Cetera's got probably 4 times that head count. LPL's got 10 times that head count, but the actual number of advisors isn't as important as the assets they're managing and the services they're providing to their clients. So interesting news. I'd like to see if any other broker dealers, similar IBDs, are going to be converting to national RIAs as well. More news. This is in the alts space. Opto Investments emerges from stealth with $145 million in Series A funding. Are you kidding me? $145 million in Series A funding. That's surprising. That's a lot. To unlock access to private markets for investment advisors and their clients. This story was on fin.capital, if you want to look it up. So despite the growing role of alternatives in powering the innovation economy, the vast majority of savings worldwide have little to no access to alternative assets. And the average wealth advisor has 0 to 4% of their portfolio in private investments, often due to a lack of resources and efficient access. So the Opto platform is launching to help RIAs level up their practices with access to exclusive private market investments. Let me just bring up my notes here. So I spoke to Joe Lonsdale, who is one of the founders of Opto and probably the biggest name on the team. But he's got a very good team of people from other parts of the business. And they believe that they have unique capabilities, competing with firms, hugely capitalized firms. I think iCapital has a $4 billion valuation and just took down $400 million in funding last year. Case, CAIS, also an alternative investment platform. You have Halo, Luma, Simon Markets. A lot of firms are building out alternative investment marketplaces. Doesn't a month go by, Michael Keats and I get pitched by another alternative marketplace. It seems at least one a month comes to us asking to be on the WealthTech map, and we have to tell them no, because the WealthTech map right now is just for software. It's not for marketplaces. But Joe Lonsdale, if you haven't heard of him, he was also a founder of Adipar, a very successful tech player in the high net worth, ultra high net worth family office and now RIA space. And they see Opto as having unique capabilities to deliver alternative investments private funds, basically private funds of custom capital, credit, or PE funds that they can deliver to advisors. They'll do the curation of those funds and the managers and deliver it to advisors for relatively low cost, low management fee plus a carry with a hurdle. So I think it seems like it's a good deal. They also announced Opto at the same time, announced a deal with Riskalyze. So they will be plugging their alternative marketplace into the Riskalyze ecosystem and offering Riskalyze clients the ability to access these customized private investment funds. Now, one question I had was, they want to offer private investments because they're non-correlated, which is great, but also they believe they can provide higher returns. But the firms that are getting higher returns are doing it because they're the only ones in these investments. If everyone gets access to them, won't that drag the returns down across the board? Maybe, depends on how successful these firms are. But there's certainly always more opportunity for these type of capabilities as more advisors look to differentiate, as advisors may be moving a little bit up the food chain into higher asset clients, or maybe their existing clients are getting older and earning more and building up more assets and want some exposure, at least a couple percentage points to private markets. That's these types of tools like Opto, like their other competitors, seem like a great way to do that. So you can find out more information. Oh, I should have had this available. I apologize. Opto Investments. You can have to Google it. I don't have the link here. I apologize. I have the link to the FinCapital article. You have to Google Opto Investments. I'm sure you can find them and learn more about their products and capabilities. Oh, here's the website. I apologize. It is OptoInvest, OptoInvest.com. We're in the home stretch. We're on story number 10. Custody newbie altruist claims number 3 spot with SSG acquisition. This is from Investment News and my friend Jeff Benjamin. Less than 2 weeks after debuting their RIA custody business on top of its fintech platform, Altruist has announced the acquisition of Shareholder Services Group, a brokerage and custodial platform, in a deal that significantly boosts Altruist's status in the competitive custody business. Altruist CEO and founder Jason Wenk said this deal puts them in the number 3 spot in the industry behind Fidelity and Schwab in terms of number of RIAs being served by their custody platform, leapfrogging over Pershing. They're adding 1,600 RIAs that currently use the SS&G platform, pushing their total to over 3,000. SS&G's custody business is technically defined as an introducing broker-dealer because it sits on top of the Pershing custody business, which means Altruist can now offer RIAs access to 2 different custody platforms. And that's unusual. Most custodians don't do that. They do what Schwab is doing. They're buying TDA and then merging them, shutting down the TDA platform. So whether Altruist does this, we do not know. As the deal brings the 2 custody portals under one roof, at least one competitor wonders whether the acquisition represents another pain point for RIAs, but on a much smaller scale. So we don't know if that's true or not. This is a comment from Rob Baldwin, looking to get some business. But again, Rob Baldwin and Trade PMR, they're an introducing broker-dealer. They resell custody from First Clearing, if I'm not mistaken. Again, not a bad business model, but it's kind of the same thing. A lot of these custodians, what we call the second-tier custodians behind the big 4, now big 3, firms like SSG, Trade PMR, now Altruist, and a couple others that used to exist, maybe don't exist anymore. If you remember, something like Scott Trade was acquired, and becoming interesting business. And Altruist, you have to give Jason Wenk a lot of credit, considering how fast he moved this business from just founding it in 2018 to now being the number 3 custodian. They started out reselling as they started out also as an introducing broker dealer, reselling custody from Drive Wealth. They had some technology problems, if I can share that, and then they moved over to Apex, which is a much more capable platform. But apparently they outgrew that, and I think just late last year they had built their own self-clearing technology out at Altruist and really became a true custodian, offering custody. And now, boom, they buy up SSG. Moving really fast. Gotta commend Jason for building this business so quickly, bringing RIAs onto the platform so quickly, and it's not easy to do, right? Advisors don't want to change custodians. They don't want to repaper accounts. So getting them to do that requires a great sales team and a very strong value prop. Here's Jason Wenk. Our team has around 350 people, including more than 200 engineers, and SS&G's tech team is 30 people with no engineers. So not a lot of overlap, but now they are both competing with Pershing and a partner with Pershing since they are reselling their custody. So how it's going to work, we don't know, but everyone nowadays in our business is either a partner or a competitor or both at the same time. So Pershing's used to dealing with this. I know we've worked with Pershing for a long time. And talk to them about working with their clients and how we all need to work together. They may be competing against some of the other vendors, but we're all on the same page when it comes to helping our clients to grow. So big news there. Custody newbie all choice claims number 3 spot with SSG acquisition. Now we're up to my favorite part of the news. We're talking about the WealthTech map. Michael Keatsis and I work on this map together. Every month we have a meeting and we review vendors coming on, vendors who want to be on the map, vendors who want to change their category. We're changing categories as new products come into the space. Some applications are being acquired, some going out of business, and we're changing the map. A lot going on. So let me just do a quick review of what we got here. El Camino Financial is new to the map in the planning light category. WealthTech, we moved into client portal. We moved Forward Lane to advice engagement. Oh, by the way, you can check these. Let me just give you the URLs. elcaminofinancial.com that's their website. WealthTech is just EVESTECH.com. And they've got what they call their virtual communication hub for financial professionals, the all-in-one client messaging, scheduling, reporting, meeting, file sharing, communication solution you've been looking for. Interesting stuff. Take a look at them, and now they're in client portal. Forward Lane, which you can find at forwardlane.com. Also a very interesting product, which we've moved into advice engagement. They focus on personalized insights and next best actions. They're AI-based. They review a lot of different applications across your business, from CRM to financial planning to portfolio management, pulling out data from across those applications, combining it, and giving advisors interesting insights, what they're calling signals, to let them know, hey, there's something you need to do. You need to call this client about this particular action. We've pulled data from multiple places. It could be that, hey, this client had a conversation we noticed in the CRM about an annuity, but we haven't seen any annuity being bought for them. You might want to do that. Great kind of stuff. This is really how AI can help advisors, because there's so much going on. Advisors are swamped with information, updates, analysis, news, all the different applications, whether it's their marketing tools, CRM tools, account opening, portfolio management, rebalancing, trading, billing, reporting, and plus all the other things around financial planning and other capabilities, taxes, managing your staff, the custodian problems. So having tools like Forward Lane that can automate, personalize, scale across your business, I think is super helpful. We moved, in the CRM category, there was some back and forth a bit, moving some vendors between CRM overlay and CRM. And we did move a couple vendors back and forth, but we put them back in the CRM overlay. Because they're based on Salesforce. And they're doing some interesting things. I have to admit, whether it's firms like Skyence or Practify or SS&C Salentica, these are firms that are based on Salesforce, and they have done a lot of cool stuff. It's really not your standard Salesforce platform. They've customized it tremendously. So there's still a Salesforce license embedded into the platform. So technically, it's a CRM overlay. It's not a standalone CRM like a Redtail or a Wealthbox or Advison or something, or Equisoft. right, or Advisor Engine. It's built on top of Salesforce, even though it's super customized and a lot of capabilities built into it. Looking under the hood, and I spend a lot of time talking to these firms to really see what they've got going. And unless we create a third category of Salesforce customizations, which we don't want to do, we've put them back into CRM overlays. But just so you know, and we've heard some complaints that it's confusing the clients because they think they can just buy Salesforce and then like it's another app exchange app. Practify, SS&C, Salentica, Skyence, these are not Salesforce app exchange apps. You can't just download them onto your Salesforce FSC platform and run them. You have to really, if you have Salesforce now, you've got to do a conversion to another version of Salesforce. And if you don't have Salesforce now, you can't just buy Salesforce and then add them. You have to buy their specific customized version. Very similar to how TD and TD used to sell their own customized version of Salesforce, and now Schwab is selling their own version of Salesforce. It's a little bit different. It requires a conversion. Not to get too technical down the rabbit hole there, but we did move them back to CRM overlay. We created a new category. We changed the name. Sorry, we changed the name of what used to be Business Support Systems. It's now called Workflow Support. And there are 5 vendors in that category. We've got Conga, DocuPace, Benjamin, Hubly, and Advisor Touch. So I talked about DocuPace earlier. Great workflow engine. They've got a lot of tools now besides their workflow engine, document management. They can do multiple account openings. Very strong account opening tool. Can open multiple accounts at the same time, multiple types of accounts. It can open annuities and insurance accounts all at the same time. They've got their new RIA product suite. They bought Precise FP. They're really doing some great stuff over at DocuPace. You can check them out. Benjamin, very interesting product created by Matt Reiner. Workflow tools and capabilities. Hubly, another interesting workflow product. Again, these don't have the breadth and depth of a DocuPace, but sometimes an RIA doesn't need that. So there's always tools for everyone, different capabilities, different strengths and weaknesses. You need to check them out. You can check them all out in the workflow support. I believe Benjamin's URL is getbenjamin.com. Hubly's URL is myhubly.com. I said DocuPace already. Advisor Touch is just advisortouch.com. And Conga is just conga.com. There you go. All right, so is that it? Am I done? All right, so I've gone through all of the AdvisorTech map changes for this month. If you have any updates you need, if you are a vendor and you are looking to be added to the FinTech map, you can go to the FinTech map on keatsis.com, and you can just click on the link and send an email. Or you can, what is the email? It's technews@keatsis.com, technews@keatsis.com. Or feel free to email me or Michael directly if you have any questions about the map. Okay, the last thing in the news, integration scores. This is where we talk about the Ezra Group WealthTech Integration Scores, which is a new research tool we launched last year. We are constantly looking to make it more valuable, more capable, more transparent, and more accurate. So we had a first version released last August with a first round of scores for about 300. I think it's precisely 298 vendors, products we evaluated out of the approximately 400 on the map. We're constantly adding more. Every month when new vendors come onto the Keatsis Ezra Group AdvisorTech map, we have about a 1 month lag for us to get time to evaluate them, look at their integration capabilities, validate them, and put their scores into our database. So you'll see them on our website, EzraGroupLLC.com, which you can see for free, and just check out the scores of any vendor or of any category of vendors. But over the months we've had this, we've noticed, it's working a little bit kind of not the way we wanted to. We want to reward the vendors who are doing deeper integrations. That's really the goal. One of the goals of the integration score was not only to provide transparency, not only to give wealth managers, tech vendors, and other interested parties a way to compare application products across different categories, maybe based on their ability to integrate, but it's also to encourage vendors to build deeper integrations. Something we heard a lot from advisors, and we work with lots of advisors, are usually the $1 billion and up RIAs, RIA aggregators, TAMPs, broker dealers. Lots of complaints over the years about vendors who say, we're integrated, we got dozens of integrations. And they're really all just single sign-ons, which are okay. We like them, but they're really not integrations. Integrations are where I can move data back and forth between applications in some way or another, or they're APIs where I can write code and pull data from your app. I can send you messages. You can run stuff as a vendor and send me back results. That's what we want to encourage, because that's going to deliver more seamless capabilities to advisors. How do we do that? We have to make the score reflective of those capabilities. So looking at the scores, the way they came out, the first round, version 1.0 of the scores, it was sort of diluting the scores on the depth criteria, which is 50% of the score. If you had a vendor, and we rank every score, every application, every integration between vendors, we rate of a 1 to 5. 1 being SSO, 5 being super deep application integration, like a widget. You just plug it right in and it works, rather than having to write any code or go into the application and find a special menu and put in your criteria and or put in your login and manually have to do it. So we rate them 1 to 5. And what we found was we just did a raw average. If you had 10 integrations, and let's just make a crazy example. If you had 10 integrations, half were a 1 and half were a 5, your average score would be a 3. And that's not really fair, because the time it takes to build an SSO, which is a 1, is so much less than the time and effort it takes to build a 5, a really deep integration, a built-in widget or something that's so easy to plug in. And we wanted to skew the scoring a little bit more to overcompensate for the 5, so that the 1s didn't dilute, because what it would do it would create a negative incentive for a vendor. If they built a couple 5s, then they wouldn't want to build anything else if it wasn't a 5, because in fact it would lower their score too much. We haven't seen anyone doing that, but we didn't want to encourage it. So in the depth category criteria, we rejiggered the algorithm to overweight the 4s and 5s and deprioritize the 1s and 2s, assuming you've got both. If you only have 1s and 2s, you won't see a change. If you got some 4s and 5s, your score on the depth criteria should go up a bit, sometimes significantly. So we felt that was useful and beneficial, and more accurate in our mind, and more incentivizing firms to spend the time and effort to build out the 5s, 4s and 5s, and the deeper, more robust integrations. We also added more questions around API support. So 25% of the score is breadth, just how many integrations you have. 50% is depth, which I just mentioned. The last 25% we call usability, which is a bunch of questions we ask about APIs. And the version 1.0, we only asked like 3 or 4 questions about APIs. Now we've got about a dozen, talking about, do you have a sandbox for developers? Do you have sample code? Is it all documented? So a lot of, what's your authentication software methodology? So we really want to know more about how robust their support is for the APIs, because we did find some vendors who said they have APIs, but there's no documentation, no developer sandbox, no sample code. It's just really hard to use them, which makes them almost useless. So we need this kind of documentation. We need this developer support if we're going to be able to use these APIs. So we built it into the scores. So if you are a vendor delivering software to RIAs, TAMPs, broker-dealers, or other wealth management firms, please go to our website and fill out the vendor survey, vendor application survey. If you can't find it, just fill out the contact us form and say you want to get a vendor survey. We'll send you the link. You can fill it out online. And I guarantee you, we haven't found a vendor yet that filled out the survey and the scores didn't go up. Every vendor's go up, because usually we don't have all the information. and we're lacking. So filling out the survey gives us a lot of information that we may not have had before, and most likely your score will go up after doing that. So please do that, EzraGroupLLC.com. All right, you've made it to the end of another episode of the WealthTech Today podcast. Thanks for listening. Please go to our website, as I keep saying, EzraGroupLLC.com. Scroll to the homepage, the bottom of the homepage, and fill out the form about signing up for the newsletter. Please, you will love it. Once a month, you will receive an email chock full of wealth management goodness, news, analysis, updates, links. You will not be disappointed. Thanks again for listening, and talk to you all again next time.